Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a Senior Manager of Trading and Derivatives Education here at Schwab, and this is Advanced Charting Techniques. And today we're going to try to solve a big issue for some swing traders, and that is, how might we find a stock that's just going sideways? If the effort is to buy low and sell high, is there a way to find those quickly? And today we're going to be using something known as the Average Directional Index that may give a value to the strength of a trend, and that might help with finding, let's say, non-trending stocks. I think this is going to be an interesting discussion. We're going to be planning and placing a swing trade by the end of the discussion today. But before we can get to anything, let me first of all say hello to everybody who's already chatting in out there. Great to see all the familiar names out there in YouTube. I'll see Kevin's already out there, but hello there, Chris and Kevin, Stephen, Jay Richardson, Will, Wiley, JP, Greg, Jim, Life in the Fast Lane, JV, Texan, everybody else. Thanks for joining us week after week. We always appreciate your attendance and your contributions to these discussions. If you happen to be here for the very first time, I want to welcome you as well. And if you're watching on the YouTube archive after the live stream is concluded, enjoy that recording. That's a great way to watch these webcasts. But if you'd like to be here in our live stream audience, this is a Friday webcast series, and we kick things off promptly at 1 Eastern time. Now, as I already mentioned, my very good friend Kevin Horner is already hanging out in the chats with us. He's been chatting with some of you already. Kevin and I have been working together for years, and Kevin's role today is just to keep an eye on those chats. If he sees a question come in that I'm not able to address just during the flow of the presentation, Kevin's there to pick up the slack for me. So thanks for having my back there, Kevin. Kevin and I would also like to issue an invitation to everybody watching to follow your favorite Schwab presenters on social media. You can find Kevin and me on X, so you can follow Kevin on X. His handle there is @KevinHornerCS. You can find and follow me on X @CameronMayCS. And you can also, as of relatively recently, find and follow me on LinkedIn. Just go to linkedin.com/in and then /CameronMayCS. But let's get into this discussion of the Average Directional Index, also known as the ADX. How is it built? And how might it be used to help a trader find sideways trending stocks? So as we get into this, we need to bear in mind that no technical approach to trading or investing is perfect. It always carries risks. So bear this important information in mind. This material is intended for general informational and educational purposes only. Schwab does not recommend the use of technical analysis as a sole means of investment research, and investing involves risks, including the loss of principal. All right, so let's set the agenda for today's discussion. As we do every week, we're going to follow up on previous trades or current, let's say it this way, current trades that were placed previously in earlier webcasts. Then we'll take a look at what's going on with the markets through the lens of our trend value momentum strategy set. And then we're going to be planning and placing a new trade using a combination of technical indicators, but primarily using the average directional index, also known as the ADX. Of course, I'll explain how the ADX might add value or insight to the trader's charts. We'll talk about the pros and cons of the indicator, but we'll also combine that with a second indicator to plan and place a trade. But one thing that I want to focus on is how the ADX may be useful for finding sideways trending stocks, which can be a big deal. So let's get into this discussion. Let's go right to the thinkorswim desktop. We only have one position remaining. The markets have gotten kind of choppy. Can anybody relate to this? We actually got stopped out of something. Yep. SIGI, we've been stopped out of. GD, we're still in. Both of these, though, were placed in recent weeks, both using the TVM Trend Value Momentum Strategy set. So if you missed last week's discussion, you may want to check that out. We went deeply into how that trading strategy is built, the TVM or Trend Value Momentum strategy set. But SIGI, let's go look at the chart, see what happened to it. So here's our TVM strategy set. It's a combination of, first of all, a couple of triangular moving averages, the RSI, and then the MACD. So first, we're looking for a trend confirmation with the 50 triangular moving average rising and remaining above the 100. And that's the condition that we had last week with SIGI. So trend looked like a check for the bulls. Also, our trader might be looking for RSI to be dipping low, sometimes getting as low as below the 40 level. indicating a potential short-term value on price. Is it guaranteed that price is going to rise? Absolutely not. As a matter of fact, we're seeing that play out right now. But we were right down close to 40 and started to rise again last week. So that's a second check for the bulls. And finally, our momentum oscillator is our MACD histogram. And as it rises and falls, it might be a representation of the tug of war between buyers and sellers who has the momentum. And you can see that the sellers appeared to have had control in the short term, but the rope started to slip here. The sellers, at least this is the way that some see the MACD, the seller momentum started to lose a little bit of traction. The buyer started to regain a little bit of control potentially as we experience what we call a red shift, our light red MACD histogram shifting to a dark red. So that was our final indication. So there's our trend, value, momentum. There was our entry. Looked like a solid entry, but we always recognize that the trade might not work out. Just because we've done a little bit of legwork to try to gather evidence for the position that we're taking, it doesn't guarantee that we're going to go up and get up to the target that we had planned. In this case, we drew a line in the sand down below recent lows. Right there's where we had our stop, and you can see today we got stopped out. Yep. Yeah, Jay Richardson says it's been a stop out week. It has been that kind of week for probably a lot of swing traders out there. That's the way it goes sometimes. But that's one position. Our GD position was also a TVM trade. This one was a little bit earlier, so this was a few weeks ago. 50 above the 100. The RSI dipping down, just nicking below 40 and starting to rise. And our MACD starting to tilt up, so we took an entry here. Our stop just below the recent lows. And boy, we got close right there. Where is our stop? Stop's at 337. What was the low right here? 337.32. So we got within 32 cents of that stop. Didn't get triggered though. We do have a target up here at 370. It's just a little bit off the top of the upper scale. So if I grab that right margin and start to drag it downward, I don't know if you knew that you could do that. You can resize the vertical scale of a chart just by clicking on that right margin, dragging it up and down. And if you want to switch it right back to where it normally is, you can click up here where it says price axis. This is the price axis. And we can just change that back to automatically fit back to where it was. Qatari says, but our stop loss should be more lower to the left side support. Now, it always is up to the trader's preference. So what we did with this entry is to just go below the previous day's low. That appeared to be a most recent support area. But I think you might be looking back here and saying, it seems like there were more touch points. Maybe we'll give it a little bit more wiggle room. Well, might make that argument. It certainly comes down to that trader's view of their charts. But in this case, we're just below the immediate support level. All right, so that one, we're going to leave that one to continue to work. We haven't hit our target, although we did get close. We rose up to, what was the high here? 366.75, about $3.25 from our resistance. Chris is saying, should we consider raising the stop at this point? Well, what if we did? I don't mind discussing that for just a moment. Where might there be a technical case for raising the stop if support has been here? It looks like that support held. Well, for some, they might look to see, has there also been a recent resistance broken? This might require a little bit of squinting, but yeah, it looks like there was a previous high right here that's been acting recently as a decent low. So could a trader make a case to maybe move that stop up? In this case, it might transition this from managing losses to managing profits. That's a possibility. There's an obvious potential advantage to that. Conceptually, we're reducing the downside risk. Now, big gap down, we could still lose just as much as ever. But if the price is just falling gradually, maybe moving that stop up might prevent us from surrendering all those gains and even dropping back into lost territory. So there's a pro. What's a potential con narrowing up that stop? Well, it makes us more prone. It just gives the trade less wiggle room. So we might just dip down slightly below these recent lows, stop us out, and the stock goes right on up and hits our target. So there are pros and cons. What do you think? Shall we? Give me a quick yes or no. Yes, let's move the stop up. No, let's not move it. What do you think, guys? What do you think? Shall we move that stop up? We're down here still at 337. Let's say if we do move the stop, I'll move it up to just below today's low and yesterday's low. Those look like they were very similar. Yeah, 354.52 and 354.54. So 354.5. 3 immediate votes came in for yes. Okay, let's do that. How about if we just give this, I'm going to use a tight stop then. Let's move that up to, let's say 50% below these lows. That's going to be, so here's what would happen. If we get down to, let's say 354, that would be below today's low. It would, at least the one that we've established so far. It would be below yesterday's low. It would be low. It would be below the 50 triangular moving average. It would also be below this high. Would it be below this one? Yep, 354.65. That one looks like that's exactly 354. How about we do that? Okay, let's click on our stop. And I'm going to nudge that on up here. Let's get it up here to 354. There's 354.02. I think that'll be close enough. So let's replace that stop. We're going to move it up to 354 and a couple of pennies. Let's send that order off. All right, there we go. We've moved the stop up. So Kevin, yep, that'll be above the entry point. So Kevin might be saying, well, we could go a little bit lower. Maybe get back away from these highs a little bit, give us a little bit more wiggle room. You can see there's hardly any wiggle room below these lows. As we've discussed, there are pros and cons to that decision. But I'm going to leave it right there. All right. So now let's go have a look at what's going on with the markets. We've seen what's happening with our stock positions. Let's see what's going on with the S&P 500. Let's get the right symbol in there. It's been kind of a rough day. Energy prices up, jobs down. Not a good combination, apparently, to some investors and traders. So this line was just to illustrate a point in a different webcast to show that we've been sideways for a long time, going all the way back to the end of October. I'm just going to remove that one. And instead, what does our TVM strategy set say? Well, the 50 triangular is still above the 100 triangular moving average. And by the way, if you don't know what the TVM strategy set was, we just covered it in depth last week. So if you're new to this webcast series, welcome. Great to have you here. Here's a quick way to get a little bit caught up on a previous episode of this series. All right. First, make sure that you're subscribed to our Trader Talks channel by clicking on the subscribe button just down below the video. It only takes a second, doesn't cost anything to do that. But our Trader Talks channel on YouTube, there's the full name right there, is where you can join live streams like this one. You can also find playlists of each of our webcast series, so you can catch up on previous episodes. So if I click on playlists, about halfway down, scroll on down to the bottom. You know how sometimes you scroll to the bottom of a page and then it loads for a second and you can scroll further? Yeah, mine's halfway down, so scroll straight to the bottom, wait for a second, and you'll see it right here. Advanced charting techniques, then just click view full playlist. And there was that discussion of swing trading, the trend, value, momentum, stock chart system. All right, very good. So let's go back here, see what's going on. This might actually, despite today's selling, despite even that, it looks like we might have even broke through, I don't know, where might you guys see support? Was support here and we've broken it? Or do you see support more like down here where we've had several candle touches, just above 67? Could it be even lower? In any case, it looked like we were challenging at least this higher support level. Price has dropped below our 2 triangular moving averages, and now we're looking at maybe a bit of a hammer candle, possibly what's known as a dragonfly doji, which is basically interpreted the same as a hammer candle. But even despite this sell-off in price, according to the trend value momentum strategy set, we would still give this a check for bullishness, continued bullishness on the S&P 500 if our 50 triangular moving average is still above our 100, which it is. So I'm just going to say, yep, check. Moving down here to our RSI, our value oscillator, that, look where it is. It is right just above 40. Actually, earlier today, it dipped a little bit below 40 and then it retreated back up above 40. So it might be in a value area. Interesting. Now, our MACD is still slipping lower. We haven't seen what we call a red shift yet, so that might be a check for the bears. So at least through the TVM lens, the balance of the scales may point toward bullishness, and maybe this is just opening a short-term window of opportunity to get into stocks at relative near-term lows. Now, it's not a guarantee that we can't just go lower. It's certainly not a guarantee that the trend isn't just going to change and we're going to sell off for a significant period. But let's just say that our TVM trader here still says, you know what, still looks bullish to me. So we're going to go do another bullish trade today, and we're not even going to scale it back. And we're going to build this trade using the ADX, the Average Directional Index. So let's get ourselves acquainted with that. I already have a stock picked out that was found earlier today by a scan that I conducted. This is just to discuss the ADX, but let's use NVIDIA for just a moment. So let's remove all the studies and let's add the ADX. And ADX happens to be alphabetically the very first indicator on our list. So that's kind of handy. Select ADX, let's add that to our chart. It's already telling us a little bit before we even apply it to the chart. Tells us a little bit about the indicator. It looks at trailing 14 days, and it was created by J. Wells Wilder. Wiley, can I share the scan? If I remember to, Wiley, I'll be happy to share that scan. It's not going to be a terribly complicated scan that we put together. Okay. James is saying ADX and DI, or did you mean DMI? It's not the one that we're going to be using today, James, but that is a common pairing. Yeah. I'm going to click apply. It sounds like somebody out there has some experience with ADX, though. Give me another quick yes or a no. Are you familiar with ADX or are you not? There's no shame in not knowing an indicator. There are hundreds of them out there. Nobody knows them all, at least hardly anybody does. So Katare says, what's the full form of ADX? I don't know exactly what you mean there, but here's what I'm going to let you down here for just a moment. In most of my webcasts, when I introduce a new indicator, this isn't new. We actually discussed this about a year ago, but I'll usually give you a breakdown of the algorithm that generates the indicator. And before I do that, I always try to think it through to make it as simple as possible to introduce the way an indicator is built. I'll just admit, I couldn't make it simple. ADX is actually a pretty complicated indicator in its construction. And as I was outlining the simplest way I could to try to explain this, I got it down to about 14 steps and said, forget it. It's too much. It's also available if you want to Google it. You can see how this is built. So I'm not going to do that today, if you'll forgive me. But I will give you just a basic summary of what maybe J. Wells Wilder had in mind as he constructed this thing. And we'll also talk about how he provided guidance for the application of the ADX. But very simply, believe me, this is a ridiculous simplification of the ADX, but it's basically sort of a moving average of the range in prices on a stock as it's moving up or down or sideways. That is not a very good description of the ADX. My apologies, but I do want to talk about how it might be used. Okay, so let's look over here. People have been chatting in yes or no. Looks like about a pretty good balance. Yes, yes, yes. No, no, no. Cool. All right. Well, let me outline a few things to know about the ADX. It was created by a gentleman named J. Wells Wilder. He's created a lot of indicators that you'll see on thinkorswim. But a few things to bear in mind is that the ADX does not indicate direction on a stock chart. Okay. Number two, it has a range. The range goes from 0 to 100. And really, what this indicator is attempting to do is to assign a numerical value to the strength of a trend. If a trend is going nowhere, in other words, it's kind of going sideways, it's going to have a lower value. If a trend is really strong, if it's going really sharply, if it's going really strongly upward or really strongly downward, it's going to have a higher value. So here's how we break down that range. If it has a value of 0 to 25, this is described as by Wells Wilder as having no trend. If it's between 26 and 50, that's a strong trend. Yep. If it's between 51 and 75, that's a very strong trend. And finally, if it's 75 to 100, because it is range bound, can't go above 100, can't go below 0. You'll see that right over here. You'll never see values below 0 or above 100. If it's between 75 and 100, that's known as an extremely strong trend. And each of these may have indications for the trader and the way that they might manage a trade, okay? But an extremely strong trend, which sounds good, not necessarily to J. Wells Wilder. Okay, so first of all, no trend. Remember, this indicator does not indicate direction. So it's easy for the bull in us to say, okay, well, if you're saying there's no trend, it must be a downtrend, right? No. When the value is below 0 and 25, and by the way, if we look at where the value of NVIDIA's ADX is right now, what is it? It's at 14.3. So it is between 0 and 25. This would be defined as being a no trend scenario for J. Wells Wilder, or it's expressed a little bit differently, is a sideways trend. So look at when we started to get below 20. As I move my cursor down, you can see the value of the ADX right here. So as I move along here, you can see it falling from 38 to 36 to 35, and it almost slips below 25 here. The first time it actually slips below 25 is right about there. Let me do this. I'm going to make sure that we've selected our horizontal price level tool, and let's draw in a line at 25, or as closely as we can get it. Just drawing a line there, just for visual reference. So really going all the way back to September, the middle of September, this has been below 0. What has the stock been doing since that time? Let's go to the middle of September. Could we make a case that our stock has been channeling since then? Yeah. Now, I think some of you are immediately going to see a potential value in this. How many times have you gone to run a search and you think, you know what I'm looking for, and it could be for any number of strategies, but let's just say that we're a swing trader looking to find a stock that's trading between support and resistance so that we can buy low and sell high. Well, how do we go tell a search engine, I want to find a stock that's going sideways? Wish that there was some way that we could just score or rate a trend from, let's say, 0 to 100, from a very weak trend that's not going anywhere to a very strong trend. Well, that's exactly what this is. So Geek Wireless says, what is ADX? So I said a little bit earlier, and it's an acronym not everybody's familiar with. It's the Average Directional Index. So the X is kind of the last letter in our acronym. It's not a very good acronym, but there you go. It's called an ADX. Yeah, so somebody's proposing potential option strategies. We don't talk about options in this webcast series. I keep it just about stocks so we can focus on the chart. But yeah, it could be conceptually for neutral option strategies, but it also might just be for swing trading of stocks, maybe buying at low prices and selling at high prices. That might be the objective. Yeah, and actually Wells Wilder suggested when we have a ADX score between 0 and 25, that might be a time to do either a bullish trade or a bearish trade. Bullish trade, buying at support, selling at resistance. Bearish trade, entering at resistance and exiting back down at support. All right. Now, what about when the stock has started to shift above 25? Now, bear in mind, so like back here, we were below 25, we start to rise above 25. This does indicate trend strength, however, it does not indicate trend direction. We'd have to look at the chart to tell that. Because even though we see this going up above 25 and our price is rising, if I were to look at a different stock, like let's switch this over to BX for just a moment. Look over here where we're rising above 25 again. Which direction is our stock going? This is just an indication of the strength of a trend, not the direction of the trend. So in this case, a score above 25 would be a strong downward trend. In the case of NVIDIA, a score above 25 or an ADX value above 25 is an indication of a strong bullish trend. So during this period is when J. Wells Wilder would propose that, let's say, our trend or even swing traders might be entering into new bullish positions. So when we have, or not bullish, sorry, trading with the trend. When we have a strong trend, that's where we might enter into new positions in the direction of the trend. So if our stock price appears to be going up and we're between 25 and 50 on the ADX, that might be a new bullish entry opportunity. If the stock is going down while between 20 and 50, we might be looking for bearish entry opportunities. Now, sometimes a trend really starts to strengthen. And if we rise to a value on the ADX between 51 and 75, did we get up there here? Yeah, look at this. We did get above 50. In this case, this is known as a very strong trend. And for some traders, when a trend has been persisting and just getting stronger and stronger and stronger, they might feel, oh, it gets a little bit hot under the collar. This thing has been going up or down for a long period. Could it be overdue or preparing for a reversal? Yeah, what Wells Wilder would propose is that with values between 51 and 75, if we're already in a position, maybe we start to tighten up our stops. It's a reminder to manage the downside of that trade. So in a very strong trend condition, tighten those stops. If we take new positions, maybe it's a smaller size because this is a strong trend that's been persisting for a while. Scaling into maybe a little bit smaller positions. And then finally, if the price has been strong enough to drag that ADX line high enough to get into the 75 to the 100 range, this might be a time where a trader just hits the pause button. Maybe I don't take new, let's say, bullish positions on an ADX that's 75 or higher if that's the trend, if the trend is bullish. And maybe this is when the trader starts to use things like a trailing stop. Or it could be they even scale out of a position. Okay. Alex says, if you have time today, can you please do a quick buy demonstration with stops for this stock, maybe project out a week? So I won't be doing it on this stock, Alex, but I will be doing a trade based on, well, using this indicator in combination with another indicator before we're done. Yes. Okay. So there we go. There is the ADX, an introduction to how it might be used in the construction of a trade, but it has its limitations. An ADX is a ranking system for trend strength. But even within a strong trend, let's say that we're bull, we're seeing an ADX score that's maybe between 25 and 50 if we're looking for a trending stock, between 0 and 25 if we're looking for a sideways stock. Well, even within strong trends or sideways trends, there can be better or worse times to get in, at least conceptually. With both of those, the trader might be looking to get in at relative lows, and that's where an oscillator might be used. And we've used a bunch of oscillators in this webcast series. I'm just going to use a familiar one. Let's combine our ADX, which is a trend strength indicator, with a momentum indicator. And I'll just use the MACD. We'll not get too fancy here. This one's typically familiar to just about everybody in my audience. If not, of course, you can go to the webcast or go to the webcast archives. Let me add the MACD here. Click apply and click OK. And as I do, here's a little suggestion. If you're not familiar with MACD, just go to our channel. Once again, a reminder, make sure you're subscribed, but you can also just do a search here for MACD. And you'll see previous webcasts where we focus just on that. Using the MACD indicator for short-term stock trades might be a good webcast to really understand this one in greater detail. But the value that the MACD might bring to this discussion is that if the MACD, when we're, let's say, in a sideways trend, if that MACD is low, or if we're in a strong upward trend, if that MACD is low, that might signal to us that the price has come down within the trend and is maybe set to start rising again. Barbara says, why MACD versus RSI? There are pros and cons. Barbara, what I will say is both of those are oscillators. There's a lot of overlap between the way those two work. I'm not going to say that one is better than the other, but what I would suggest is do a side-by-side comparison. I'm not going to do that today because we don't have the time to do it, but you can just bring up both on a chart, see which one seems to assist with the timing on the stock that you're viewing, see if it helps out with the next trade. All right. True Nice says, can this be used on a shorter term time frame? You know what? With just about every technical tool or technique that I discuss in this webcast series, yes, conceptually, we could just go to a one day, 1 minute chart, or we could pop it out to a 10-year weekly chart and use those indicators without any modification. Most technical approaches are what we call fractal. They can be used in basically the same way, regardless of time frame. But I also have to say that also regardless of time frame, there's no guarantee of performance on a given trade. All right, but let's look at our MACD. How might it be combined with our ADX? Well, for a trader who's looking at a sideways trend with an ADX between 0 and 25, they might be looking to the MACD to show that momentum has gone from the sellers holding all that momentum, shifting back to the buyers again. In other words, we're once again looking for a red shift, looking for our MACD to be below 0, shifting from bright red to dark red. And look what we happen to have right now. So could we conceptually set up a trade as someone else proposed? Who was that? Was it Alex? Anyway, is there what appears to be a valid entry signal on this according to this approach? ADX between 0 and 25 and the MACD shifting from bright red to dark red? Yeah, looks like there is. Were we to put on that trade, where might the trader place their target? Well, they might look back up to channel highs with an ADX that's between 0 and 25. That is a channeling stock using the channel highs and lows. Might be just what that trader is using for targets and for stops. The stop might be just below the channel. Target might be right up at the top of the channel. But what I wanted to do today, though, is I was kind of cheating, just bringing up a chart, showing this to you. How might we find stocks? How might the trader use ADX to look for trade setup scenarios like this? Let's go build a custom search. So follow along with me. This is done on the live platform because we're going to be using technical studies to build a search. It can only be done on a live platform. So I'm going to bring up my fake live platform here, demonstration platform. And we're not going to use any of these stock filters. We're going to be using a study filter. So I'm just going to close these out. So we're on the scan tab. This is our search our search tool on thinkorswim. And let's first of all look for the ADX to be in the right position. So let's just say that we're looking for a sideways stock. Let's add a filter and we're going to look for a technical study known as the ADX. It's not the ADX crossover. In this case, we're going to do a custom scan. All right. So we're going to delete the ADX crossover and add our own specific condition. So on this condition pop-up, we're going to choose a study, ADX, and we want that to be, well, we want it to be above 0, but below Well, let's say 25. I'm going to be a little bit more stringent than 25. Let's look for an ADX that's not just barely reached below 25, but let's say it's sort of solidly below 25. We'll set an upper range of 20. Okay, let's go. Our ADX is less than a value of 20. Okay, let's click OK. But we're going to add a second filter where we're also requiring the ADX is above 0. Okay, so little repetition. Let's edit this. Let's delete the ADX, add a study known as the ADX. So the ADX crossover has been deleted. Let's say that it's greater than a value of 0. So with those two, did I put 100? Let me go back here. I must have just, yep, I just didn't hit enter. There we go. Save, click OK. So with those two requirements, we're telling the scan, hey, we want to find stocks that are between 0 and 20 with the ADX. How about we do this? Let's add one other thing. I'm going to route this to the S&P 500. So we're just scanning through the S&P. We're going to see if there are any S&P 500 companies with an ADX between 0 and 20. So these should be channeling stocks, right? Now within those channels, let's say we also want to see the MACD to be below 0, but rising. Here's how that might be accomplished. Let's add two more filters. Study. Let's add another one. Study. And let's edit this first one, change it from the ADX. Let's delete that. And we're going to select the MACD histogram. And specifically, we're going to look for the MACD histogram to be less than a value of 0. So it's below 0. It's in the red. Let's save that. But we want that MACD. We'll make this a study. MACD histogram. We want it to be greater than the MACD histogram value from yesterday. Here's how we do that. We already told it to be below 0. But in this case, we're going to compare it to itself. So we're going to choose the study, MACD. And we're going to use this offset function. I'm going to put a value of 1 in there. That's specifically saying we want today's MACD to be greater than yesterday's MACD. That's what that means. An offset of 1 means yesterday. All right, so let's click Save. So the summary here says MACD is greater than the MACD from 1 bar ago. Perfect. Click OK. So see if we can mentally connect the dots here. We're looking for S&P 500 companies with an ADX greater than 0 but less than 20. That should be sideways. Where our MACD is below 0, it's in the red, but it's above yesterday's MACD histogram bar. So we either are moving from bright red to dark red, or the dark reds are just getting shorter. So let's run a scan. Now I'm always a little bit concerned when I hit scan. I'm also doing a webcast that can slow the scan down. This time it seems like it worked right away. But I had a look at these companies right before the webcast kicked off. And I wanted to have a look at APH. AMD, INTC, we already have positions in those in other webcast series. Let's look at APH. So I'm going to bring up my chart of APH. And if this scan has done its job, Deepak says, how is the offset 1 different from within 1 day? Well, if we can't be above, the scan, we want to compare today to yesterday. So that's the offset. It's when we have that bar, that requirement set to 1, it's comparing today to yesterday, which is what's desired here. Okay, so let's see how this is done. Is our ADX between 0 and 20? It is. Does that translate into a recent channel on our stock? Sure seems to be. Looks like our lows might be right through here. Our highs could be here or here. I'm going to draw that in. There's one candle where we kind of popped up above and then came right back down below. But let's say it's more like our resistance appears to be up there around 155. So this low around 127. I want to be really precise. When we've drawn a horizontal line, you can actually right click on it and edit its properties. I'm just going to do some rounding here. Get rid of the pennies. Okay, right click here. There we go. I think that's just going to make it a little bit cleaner. Let's edit the properties one more time, and I'm going to extend this off to the right. And it looks like our stock is kind of channeling. This search is doing its job. Did it also find the stock price at the lower side of that channel? Yeah, it certainly did. Now, could we just go through the S&P 500 component companies and manually look through them? We could. Yep. But having a scan built like this can save us some time there. So let's do this. Let's save this. Let's use the right menu. So we click on this menu here. We're going to save this scan query. I'm going to call it our ADX swing scan. Okay. So I have saved it for myself, but I'm going to share that with my audience as well. Let's click share scan query. We'll give it the same name, ADX swing. And I will share this. I'm going to post it over here in the chat. Just be aware as I share that scan, shared scans are not guaranteed as a timing or accuracy. I'm also going to make a note over here in my session notes to share it with my audience who watches this webcast after the live stream. So if you're watching on the recording, you'll be able to just go down in the video description and find this link to this scan, okay? But when I share a link like that, here's how you use it. You pop up here, click on the little gear, and open a shared item. Drop it in there, click preview, click import, and then that adds that to your scans on the live platform. And then to run that scan, you just load it up right here. Go to your personal scans. All right. Is it possible to use this scan with the SMA? Trader Joe, we could, but just be aware, I don't have time to talk through how that might be done today. It would be a significant reversal from the discussion that we've had. So I'll just say, yeah, it's possible. All right, but let's go do our trade. Here's APH. How about we enter now? Plan to sell at 155. Stop. Let's put it maybe a couple of bucks below 127. Let's go 125. So let's go to our trade tab. This is basically, it was $134 stock. Let's buy about 65 shares. Keep the investment around 10,000 bucks. That's what we've been doing in this webcast series. So I'm going to right click on the ask price, put in a custom buy order with an OCO bracket. Let's link these orders together so that the quantities match. Let's buy 65 shares. I'm going to do that at the market price. Let's sell those 65 shares if we can get up to, I didn't need to change the limit. If we can get up to 155, make that good till canceled, and we'll have our stop down there, I believe I said, at 125. There we go. All right, so let's confirm and send this order. Buying 65 shares of APH at the market price. Obviously, there are risks associated with putting in market orders. We're not guaranteed that we'll pay exactly whatever is displayed here. We'll sell if we can get to 155, or we have a stop set to be triggered at 125. If we fall down to that level, it's not a guarantee that we'll sell at 125. That's just the trigger price. Could sell for lower. No commission on this trade, but there can be on some types of trades, and we'll send that off. There we go. We're in 100. We're in look at that, 134. That makes the math really easy. But guys, we've accomplished what I set out to do today. I want to talk about using ADX to scan for sideways stocks for swing trades. I hope this has been a valuable discussion for you. We've talked about how the ADX is built and actually planned and placed an example trade using it in combination with the MACD. So we'll follow up on this in future webcasts, but I'm going to let you go enjoy your Friday. Enjoy the rest of our webcasts through the rest of today. But as you go, remember you have a full slate of resources available to you from Schwab Education. So one quick reminder, make sure that you have subscribed to our Trader Talks channel. You can click on the subscribe button right down below the video right now. It only takes a second, doesn't cost anything. But our Trader Talks channel on YouTube is where you can join the live streams. You can find our playlists for previous webcasts. You can even do keyword searches through our archives as we've done today. Also, Kevin and I would like to issue an invitation to you to follow your favorite Schwab presenters on social media. You can find and follow Kevin and me on X. You can find Kevin on X at Kevin Horner CS. You can find me on X at Cameron May CS. But if you reply to one of my posts, like this video that I just made and posted today that talks about the great Fibonacci debate, if you reply to this post, I just reply right back to you. But I do the same thing on LinkedIn now. So you can find and follow me on LinkedIn. Just go to linkedin.com/in/Cameron May CS. That's my profile. You can give me a follow there. But everybody, thanks for all the thumbs up. That's definitely appreciated. 175-ish people watching right now, and it looks like 74 of you have already clicked the like button. Thank you. That's like applause to your presenter, and it gives the video a nice boost in the YouTube algorithm, helps more people find these important discussions. Okay, guys, I will see you next week. I'll look for you in a future webcast. I'll also look for you on social media, on X and on LinkedIn. But whenever that day arrives, when I next see you, I want to wish you the very best of luck. Happy trading. Bye-bye.